Alright guys, tale as old as time, song as old as rhyme. So the US economy is in deep trouble, and we just don't mean heading towards a tariff crash. The odds of a recession are rising despite what Trump is telling everyone. Now what we need to discuss today is the end game of the US economy and holders of US paper. Look, we get it right, it's the world reserve currency and treasuries are the gold standard in financial markets. But there will be winners and there will be losers when the day of reckoning, the day of default comes. Now, economies that cling onto the post-Bretton Woods system will see their reserves evaporate to thin air. And let's make things clear, in no uncertain terms, Scott Bessent is going to keep borrowing money and make the national debt even worse.
Quickly in the House and the Senate, thanks to your leadership. We're also going to have debt ceiling in there, so we're going to get an increase in the debt ceiling. And that will be done and dusted for 2 years. We won't have to worry about that.
So you heard what Bessent said. Trump plans to increase the national debt, the debt ceiling, by up to $5 trillion. And that will give the Trump administration another 2 years of runway to keep spending like drunken sailors. And what happens when the US government reaches yet another debt limit crisis? Well, Bessent has given the answer once again.
The United States government will never default, that we will raise the debt ceiling and Treasury will not use any gimmicks. We will make sure that the debt ceiling is raised.
Now, this is code language for we will issue a ton of bonds and hammer the dollar down even further to fund our spending needs. And needless to say, this presents a horrific endgame to the entire Treasury market. We are going to reach a point where the Federal Reserve has to step in and buy up US debt to prevent the entire system from imploding. This is serious because the tariff war is only going to drive us off the cliff at warp speed. The US debt burden is now heading towards uncharted territory. By 2029, we will exceed the post-World War II debt level of 106%. There's a compounding nature to this crisis, especially if the deficit doesn't fall dramatically. Bond yields across the board are at breakneck levels. The 30-year is near 5%, the 10-year is just under 4.5%, the 12-month T-bill is going at 4.1%. So no matter the duration of bond issuance, Scott Bessent is trapped. Now, when Trump waged his trade war, he expected one major shift to happen. That money will flow from stocks into US treasuries. That excess demand will push bond yields down. And if that really happened, it would make the debt burden much more manageable. But that didn't happen at all. Instead, global investors started dumping their bond holdings as well. And now the latest Treasury update just signaled who will be the biggest losers once the US eventually defaults through inflation. Now, China sold more US debt in March and we have taken a dramatic turn. Their bond holdings have officially dropped below that of the UK. British holdings of US treasuries hit an incredible 779 billion while China dropped to around 765 billion. And top of the list is Japan holding strong at $1.1 trillion worth. It's mind-boggling how much the Brits trust the US debt market. Now, I'm sure there is some sort of implicit agreement between Washington and London, but this level of exposure isn't smart at all. Now, then again, Gordon Brown sold Britain's gold reserves at the market bottom, so maybe we shouldn't be surprised at this point. Now, we are clearly beginning to see lines drawn in the sand. The G7 is still supporting Washington despite the trade war. Now, this might reverse, but it looks like they are still clinging on to the old world order. Here's the problem with holding too much US bonds. To make money, you are betting on rates to go down. At the same time, you are hoping, you are praying for the US dollar to strengthen to draw in more capital into US markets. But even Goldman is still bearish on US assets. The exceptional myth is eroding and these moves have much longer to run. In other words, the dollar strength could continue to plummet. We are now at a 15-month low, but things might continue to devolve. All this is connected once again back to Trump's horrific trade war. Now, if Trump decides to U-turn his tariffs, then maybe the dollar might recover and regain some lost ground. But he's still insistent that the US will win and he's pushing ahead with very weird demands. He's now blaming Walmart for price increases They are obviously connected to tariffs. The narrative is starting to break, and US companies, as we said, can't afford to absorb the tariffs, so they are increasing prices for US consumers. However, Trump now wants Walmart to eat the tariffs to absorb the tax burden using their balance sheets. But can someone inform the president what that will mean? Retailers like Walmart, they aren't operating on huge margins. They are running on fumes, especially when all their costs are going up. If their profits collapse enough, they will be forced to lay off workers or stagnate salaries. Plus, if enough products get unsold, they might just pull products off the shelves. Now, suddenly, the supply of goods collapses, causing prices to stay high or even go up. How confident are you in US markets today? 100% solid? The US consumer is in crisis, and US companies are being forced to destroy their bottom line. Now, notice I haven't even talked about sanctions and asset confiscation. There isn't a need to, because the entire fiscal and economic situation alone is an epic mess. Even if we enter the make believe world of zero US sanctions, the fiscal situation alone is a massive problem. Remember the US China reversal, the trade pause that everyone saw coming a mile away? Well, Trump says he did the deal to save China's economy. Apparently, he is now the savior of Beijing.
I've got 150 countries that want to make deals. You know, you have a lot of countries.
The market was really happy with the China situation and the sit down
They were.
With
And
the
you know
Treasury
what?
Secretary.
If I didn't do that deal with China, I think China would have broken apart.
Not us, them.
We weren't going to break. We're not going to break. They would have broken apart. You know, our country has a lot of spirit. And you know why? Because of November 5th.
Now, it's this craziness that's making Trump go pedal to the metal with his tariff war. He still believes the US is winning, even after all the evidence points to the contrary. Even Japan is not playing ball with the US in this trade war tango. The Japanese are holding out for a better tariff deal despite their economy contracting in Q1. They saw what happened with China. Playing hardball actually works. Even Europe and Canada are not on their knees begging. And that's despite their huge dependency on US markets. This isn't a win for the US, who will see trade flow drop compared to the past. And if the economy contracts, consumers will get clobbered. And this will eventually take a hit on government revenues. Trump's spending plans will also spike the deficit to the moon. So it isn't a surprise that Moody's just downgraded the US economy. They slammed down US debt and stripped it of the highest AAA rating it held. There are companies whose debt are rated higher than the US government. It's a disaster, it's a serious crisis. Once again, this revolves around rising government debt and the widening deficit yet again. The ratings agency doesn't trust the Trump administration to get the national debt in order. Now, Moody's basically gave an uppercut to the US economy. The White House, of course, is dismissing downgrade they are lashing out. But Moody's assessment is really dire. According to them, the advantages held by the US economy cannot outweigh the fiscal crisis. Even holding the reserve currency isn't enough. As a result, they expect the federal deficit to hit 9% of US GDP by 2035. That's terrifying because it will push the debt pile into serious risk of default. And to add insult to injury, Moody's mentioned how Trump's revenue generation is relatively low. In other words, the tariffs are not generating enough money. They simply are not working. So does the Moody's downgrade really matter? To us, we know the fiscal situation is already dire. There's no way to escape this period of fiscal dominance without entering a near depression. But for many investors and market participants, they still need to see the red flag warning to wake up, and finally Moody's, they are flashing the red flag. For the first time in history, all three ratings agencies, they have downgraded America's credit rating. For over 100 years, it has been pegged at AAA. So there is a consensus today that US debt levels are just too high. There's very little that can be done to stop the moving train, especially when yields today just refuse to come down. Now, on a mechanical level, does this downgrade affect investors holding US bonds? Now, it depends on the type of investor. China will still be dumping, and many other central banks they'll be holding less. But nothing will really change when it comes to commercial banks, which are huge buyers. Regulators still lump the new US rating in the highest quality tier when it comes to risk. So allocations to US bonds in these banks probably won't change. Even if the US was downgraded 2 more notches, the system still ranks it at tier 1. It's very absurd. But we have to watch out for retail investors and foreign holders of US debt because collectively they hold more bonds than the entire financial sector. So a dump there or people simply not buying will have repercussions. The households in the US holds 11% of total US bond holdings. For the rest of the world, it's around 33%. The last thing they want to see is the US debt level rising without any plan to cut spending down. Because the response to a rising debt pile is very predictable. Either you borrow money from the world and you compound the problem, or the Federal Reserve steps in and they save the day. Choose your disaster. And if Powell is forced to step in, confidence in the entire dollar system will collapse, especially when Trump is waging a global trade war not just today but at least for the next 4 years. And make no mistake, this current trajectory is simply unsustainable. Just the interest payments alone is spiraling out of control. In their downgrade, Moody spoke about this. Interest payments today might be at 14% of government revenue. By just in a decade, this could balloon to 30% of revenue. Out of $10 collected by the US government, $3 will be used to pay off bondholders, not the capital, just the interest payments alone. Does that inspire confidence in the US financial system? There's a reason why central banks are buying alternative assets like gold and they're not going to stop. But this adds an interesting dynamic in future US trade talks. Trump will need to find buyers of US bonds. There's simply no other option left. When local buyers, they're all geared to the hilts full of this stuff. How are you going to force it down their throat? Things are so desperate that Trump himself is willing to travel to China to meet President Xi. He's willing to go from Washington all the way to Beijing. And chances are Bessent will also be there and want to bet if the topic of US bonds comes up. So it might be the good old hinting here and hinting there, asking the Chinese to resume buying of treasuries or at least to delay the dumping of their stockpile. Now there's speculation that the US might also be going around the world telling countries to buy a special type of bond, buying a 10-year or 100-year debt that yields nothing to bail out the entire US financial system. Now it's all speculation for now, but won't be surprising if the US actually puts that offer on the table. Lend us money for nothing and we'll bring down the tariffs, because if they don't, the alternative is simply unthinkable.
Are U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
The playbook doesn't change at all. Doesn't matter if it's Greenspan, Powell, Yellen or Bessent. Meet the new boss, same as the old boss. So do you hear what I hear? It's the sound of money printers in the distance getting prepped and ready. It's time to brace for impact. But let me know what you think. Will the G7 keep buying up bonds or eventually dump theirs like China? And what is the end game here? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.